Today, we're diving into a really interesting statistical tool called the rolling Z-score trend. And this one's by QuantAlgo. Now, what this indicator does is pretty cool. It basically helps us see how far the current price has strayed from its recent average. But it does this using standard deviations, a statistical measure. We're going to break down what this indicator is all about and how you might use it in your trading. If you find this video helpful, do me a favor and hit that like button. Let's get to it. Now, to get this indicator up on your screen, you'll first want to head over to TradingView, which is the platform I'm using here. If you don't have an account, no worries. I've got a link down in the video description to help you sign up. Once you're in, load up whatever market and time frame you're interested in. Then click on the Indicators button, and in the search bar, just type in Rolling Z-Score Trend. You're looking for the one by QuantAlgo. Click on that, and it'll pop right onto your chart. And there it is, ladies and gentlemen, the all-powerful Rolling Z-Score Trend Indicator. So, in a nutshell, this indicator is designed to transform your raw price data into standardized scores. This helps you spot when things might be getting overbought or oversold. And it also does a great job of tracking shifts in momentum. It's all about bringing some statistical clarity to what can often look like chaotic price movements. So, when you add this indicator, you're going to see a few key things on your chart. First, there's the Z-score line itself. This line is the heart of the indicator, and it's showing you, in terms of standard deviations, how far the current price has strayed from its recent rolling average. But it does this using standard deviations, a statistical measure. Then you'll notice these background columns, which are usually green and red. These are your momentum columns, and they're showing you the rate of change, or the acceleration and deceleration of those Z-score deviations. We'll also see some threshold lines, usually at plus 1.5 and minus 1.5 by default, which help define potentially overbought or oversold zones. And often, there's an info table that gives you the exact numerical values for the Z-score and momentum in real time. Now, let's peek into the settings because you've got some good customization options here. You can, of course, set the look-back period, which is how many past bars the indicator uses to calculate its rolling mean and standard deviation. The indicator actually uses a 3-period EMA to smooth out the raw Z-score line a bit, which helps cut down on noise while still keeping it responsive. A really neat feature is the pre-configured settings. You've got default, which is a balanced setting for general use. Then there's scalping, which is super responsive for really short time frames, like 1 to 15-minute charts. Swing trading is optimized for holding positions for a few days, filtering out more noise and looking at bigger swings, say on the 1-hour, 4-hour, or daily charts. And finally, trend following uses maximum smoothing to help you stay with established longer-term trends, best for daily or weekly charts. Another important thing to note is that this indicator uses confirmation filters, meaning it usually waits for the current bar to close before it locks in a signal. This is a big help in avoiding those jumpy, premature signals you can get if the price whipsaws around mid-bar. So, how can we actually use this rolling Z-score trend indicator in our trading? Well, one of the primary ways is to understand market conditions and potential momentum. When that Z-score line is above 0, it's suggesting that the price is trading above its recent statistical average. This could mean bullish momentum is in play, or it might be a sign that prices are getting a bit stretched to the upside, potentially overbought. Conversely, if the Z-score line is below 0, it suggests the price is below its statistical mean, which could indicate bearish momentum or potentially oversold conditions. A cross of 0 line by the Z-score can signal a shift from one statistical regime to another, hinting at a potential trend change. Now, those threshold zones, typically set at plus 1.5 and minus 1.5, are really interesting. When the Z-score line moves above the upper threshold, say plus 1.5, it's highlighting a condition that might be significantly overbought. And when it dips below the lower threshold, like minus 1.5, it's pointing to potentially oversold conditions. Sometimes you might see the Z-score push to even more extreme levels, like plus 2.0 or minus 2.0 or even higher. These are statistically significant deviations and can often signal that a reversal might be on the horizon, kind of like a rubber band stretching really far. But, and this is important, it doesn't mean the price has to snap back immediately. Strong trends can keep pushing that Z-score into extreme territory for a while. This is where those background momentum columns become super valuable. The green columns show you when there's accelerating positive momentum in the Z-score, meaning the Z-score is not just positive but moving up faster. Red columns show you accelerating negative momentum. The height of these columns tells you about the magnitude of that acceleration. But one of the most powerful signals you can look for here is momentum divergence. This is when the momentum columns start to contradict what the main Z-score line is doing. For instance, the Z-score line might still be pushing to new highs, but the green momentum columns are getting shorter. That's a classic sign that the underlying bullish strength is weakening, even if the price is still inching up, and it could be an early warning that a reversal is coming. The same logic applies in reverse for bearish setups with the red columns. And remember that confirmation feature we talked about in the settings? It's generally a good idea to wait for the price bar to close before acting on a signal from this indicator. This helps filter out some of the noise and can give you a more reliable picture of what's actually happening. You can also use the info table if you want to see the exact Z-score and momentum values for more detailed analysis or for managing your positions. So, to sum it all up, the rolling Z-score trend indicator is a really clever tool that takes price data and standardizes it, allowing you to see how far the current price is deviating from its statistical norm, regardless of what asset you're trading. It helps you identify potential overbought or oversold conditions, gauge momentum, and even spot those subtle momentum divergences that can give you a heads up on potential trend changes. The different preset modes also give you a lot of flexibility to tailor it to your specific trading style, whether you're a scalper or a long-term trend follower. Plus, it's open source, which is always great for transparency. Now, just a quick disclaimer, this is not financial advice. The strategies and indicator explanations I've talked about here are for educational purposes only and are based on how these statistical tools generally work. You should always combine indicators with your own price action analysis, fundamental research, or other confirmation tools before making any trading decisions. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned for more. Thanks for watching. See you next time.